Yeah, I think we should be good to go. So good afternoon, everybody. Wherever you are, maybe good evening for some and good morning for others. I'd like to welcome you to our sub-regional meeting today. We are discussing something that I'm sure you're all passionate about. And it's basically trending, I guess, this week as part of the Pan-Africa Conference on Tax and Illicit Financial Flows. So this is a discussion that I know many of you are familiar with and have been following online for the most part, at least. We have a very rich panel of speakers, and we also have, within the attendees, I'm sure there are quite a number of people who are interested in these issues. So I'm happy that you're able to join and spare some time to join this discussion. Of course, I think you're all familiar with the Pan-Africa Conference, the annual conference mostly hosted by Tax Justice Network Africa and partners. And so we're happy to join the co-conveners this year, especially because the theme this year was really key for some of the work that Publish What You Pay does around taxation, of course, but also the extractive sector. But particularly for this meeting, we are looking at resource taxation in terms of to use the charts. Our panel of speakers will be speaking from some of the experience. They'll be speaking into some of the work they've done, some of the cases they have, policy and practice in that sense, and some of the key issues that we need to take forward as we discuss these issues. So I welcome you all to this meeting. We hope that the 1.5 hours we've set aside will be very rich and very relevant for your work. And it's also a learning opportunity for all of us, I'm sure, because of the different experiences that we have. We have a very rich panel of speakers, as I had mentioned earlier, and I know they'll be speaking quite a bit about what they do and the kind of work that they are currently engaged in related to this issue around taxation, extractives, in the work, within the context within which they're working in. So key to this meeting, of course, our main really objectives, our takeaways at the end of the day is that we really want to discuss and look at some of the relevance of taxation in the extractive sector, the impact of COVID on resource taxation. That conversation has been going on for a couple of months. Quite a number of publications have been sent out in different spaces. And then also we look at really the best practices, policies and practices for resource taxation to optimize future revenues. And that's really, we are going to start off our discussion, and I would like to invite David. David is a senior economic analyst at the Natural Resource Governance Institute. He advises governments and civil society on governing oil, gas, and mineral resources. In recent years, he's focused on taxation and the impact of the energy transition on oil, gas, and mineral-dependent countries. He used to work in the Zambia Revenue Authority, devising tax policy and anti-avoidance and School of Economics. And we thank you a lot for joining the meeting. So you're welcome to start us off on some of these key issues that we're looking at and some of the work that you've done in the recent past. I know that there is a publication I shared with the participants and our members that NRG has recently published, and some of the issues around resource taxation, especially in the oil and gas mining. So feel free, you're welcome to start off.
Great, thank you very much, Nelly. And thank you to you all for spending the next hour and a half of your life with us. I think it will be useful and enjoyable. I'm going to share my screen and then show you a few slides. Okay, can everyone see?
I should, yeah, I can see it, yeah. Thanks.
Great. Okay, so I'm going to focus on taxing African oil and gas during and after the pandemic. So I think other panels are going to look at mining, but we're now going to focus on oil and gas. And this, as Nelly says, comes from a report that I wrote with my colleagues Anna Fleming and David Mihalyi. I think Anna's on the call today. And the key message that we had in this report is that with the crash in prices from the pandemic, governments will be tempted to race to the bottom of tax competitiveness and regulatory standards. So they're tempted to give a lot of tax breaks out to oil and gas companies. But it's important to not just race to the bottom, but avoid racing back to the top. Okay, because we think that prices will rise eventually. And it's important that governments devise tax policies that can react to that change, that they don't just give away tax breaks and then fail to tax the boom when it eventually comes. So let's dig a bit more into this. So I'm going to talk in three parts. The first is to look at oil price forecasts. And the big caveat here is no one knows what the future of oil prices are, but I think it's important to see what different organizations and companies are talking about in terms of their forecasts. Then I'm going to talk about what's been the impact of the recent crash in prices on both operating projects and undeveloped projects. And I think it's important to separate the two. And then finally, we'll talk about, well, what's the implications are for tax policy. So there's a consensus that the price will rise to some extent, but we don't know by how much. So here is the last 20 years of the Brent oil price, just to show perspective. And recently from the pandemic, there was a big crash in prices, went down to about $20 a barrel. It's come up to around about $40 a barrel now. Over the last 6 years, since 2014, when there was a big crash in prices, there's been very little investment in the oil and gas industry. So it means that when eventually the world recovers from the pandemic, there is not going to be much supply to meet the new demand that's going to come. We're going to start driving cars again, flying planes. There'll be a lot of demand for oil, but there won't be much supply. So prices are likely to rise. Some say by quite a lot. Rystad Energy, which is the data provider that provides us much of the data in this report, expects prices to rise to almost $70 a barrel over the next 5 years. The futures market, which is theoretically the best guess we have about the future,
so this is
suggesting that the price will be about $53 a barrel. Then international oil companies, on average, think that the oil price will be about $65 a barrel. So there's some rise, but there's a lot of discrepancy about how much. Okay, so that's the next 5 years. In the longer term, saying up to 2050, there's even more uncertainty. So on this side in blue, there's a range of prices of companies and analysts and their assumptions about the long-term oil price. So it's ranging from $55 a barrel for the BP to up to $80 for Equinor. So a very big range. But in general, none of these scenarios are consistent with the world meeting the Paris Agreement. So the Paris Agreement is the climate goal to try and limit the global temperature rise to below 2 degrees Celsius. So some organizations have tried to estimate, well, what's the long-term price that's consistent with achieving that? And they think it's somewhere below $50 a barrel. And the ones here is between $32 and $48 a barrel. So this is, in essence, what would happen if there's a fast energy transition, if China, the EU, the US, all go quite fast in terms of developing renewable energy. And until quite recently, I'd have said, well, that's not very likely. But within the last few months, we've had Biden winning the US presidency, and he's pledged for the US to be carbon neutral by 2050. The UK and the EU have also pledged very similar targets. And much of Southeast Asia now, the big economies in Japan, South Korea, and China have all pledged to be carbon neutral by about 2050, 2060. What does this all mean? Well, prices are low now. They could rise somewhat in the future. And then there's a big discrepancy. Well, could they continue to be high over the long term, or could they be much lower as the energy transition accelerates? We don't know, but the important thing is there's going to be still a lot of volatility and a lot of uncertainty. What does that then all mean for actually oil projects? So as I said, I think it's worth seeing the analysis of operating projects from those that are yet to be developed. So this looks at the average operating costs and the taxes on each barrel of oil produced for 5 countries in Africa, both north and south of the Sahara. And what we're showing here is it's important to show operating costs, because for operating projects, what matters in terms of whether the project is stopped by the company is whether the price is above operating costs and taxes. It's not about whether total costs. What matters is just operating costs. As long as the price is above operating costs and taxes, then the company, it should continue producing and keeping the project alive. And importantly, that also means that the government doesn't need to give any tax breaks on those projects. So our analysis suggests that on average, in all the major oil producing countries in Africa, there's no need to give a tax break for projects that are currently operating. So that's a key takeaway. If you see your governments pledging tax breaks to operating projects, there's a good rule of thumb to suggest that's not needed. I think someone's hasn't muted. Could they mute, please? Then let's look at undeveloped projects. And an important thing to use here is a concept we call the break-even price. So this takes total costs, so that's exploration, development, operating costs, all of taxes, and importantly, all financial costs, so interest rates and dividends to shareholders. And we divide all that by the total production of oil and gas expected over the course of the project, okay? So the idea here is that a company is likely to develop a project if they think the oil price is higher than the break-even price of their project. In other words, it means the project will break even. It'll make enough profits for them to develop the project. If they think the oil price is much lower than this break even, they won't develop it. Okay, so let's apply this to a country. So here we've got Nigeria. And what we've done is lined up all the projects that could be developed over the next 5 years in Nigeria. And the height of these bars is the break-even price. So all those projects with a break-even price below, say, the current price or the forward price even, are very likely to get developed by companies. So in Nigeria's case, most of the next generation of projects are probably going to be developed, even at such low prices. But there's some projects, these in the top right here, that are borderline cases. There's a really big incentive for governments to reduce taxes on these projects to make sure that they break even and they get developed. But it's important for us all to ask, well, should the government do this? We already know that prices could rise to possibly much above $53 a barrel. So even these projects could be viable. Are we sure that the government can actually target just these projects and not give tax breaks to all these other projects that don't need tax breaks? Because that'd be a huge amount of money wasted. And then how can they actually give the tax break? What sort of tax break should they give? Is there a better way of doing it? And I'm going to answer these questions at the end. The other thing we did was to look at, well, what would it mean if some of these projects weren't developed for the total production in countries? And here we took the 6 countries we analyzed in sub-Saharan Africa. And For Ghana, Angola, Nigeria, and Tanzania, a good proportion of the production in the future will come from currently operating projects. As I said, these are projects that probably don't need any tax breaks. They're probably going to continue producing. The share of production in green are those that are new projects that probably will get developed because their costs are quite low. Their break-even price is below $40. But then in the yellow, orange, and red bars represent production coming from projects with much higher costs. So the key thing here is that for the new producers, the Ugandas and the Senegals of the world, quite a large proportion of their future production could come from projects that may not break even at the current prices or if prices stay low. So these governments might have a very strong incentive to give tax breaks to get their industry running. But also the key idea here is that established producers could well continue producing, but the new producers, there may be a very shaky future, very uncertain future for these countries. So what does this all mean for tax policy? Well, I think the key thing to take away is that we need to make sure that governments don't recklessly win the race to the bottom, that they don't cut taxes and try to become the most competitive in terms of taxes in the world and try and attract investment. Because eventually, prices are likely to rise again. And then they may lose the race back to the top. They may lose the chance to tax the next oil boom. But we also know that the future of oil is very uncertain. So prices may not stay high forever. So what we need is tax policies that are robust to this uncertainty, that they can tax both the booms, but that they can also reduce taxes in the busts. So specifically, what might be useful? Well, I think it's worth avoiding tax breaks for projects already producing. Almost all projects won't require them. In fact, I would suggest avoid tax breaks in general, but if governments are to use them, potentially use a sunset clause. Now, sunset clause is a clause that means that the tax break is temporary. It's only valid for, say, 6 months, and then the sun sets on it. It will automatically be cancelled. So that means that these tax breaks won't continue benefiting the company even when prices rise. But I think even better is to plan for uncertainty and to use price progressive tax regimes. So tax regimes that automatically increase and decrease as the prices increase and decrease. This is quite common in quite a few oil producing countries, but not all. So I think it's worth checking your country to see if you have this. And because it's possible that prices could be quite low in the future as the energy transition accelerates, we need to make sure that those price schedules in production sharing arrangements and royalties and so on, they're robust to low prices, that we need to stress test them for prices below $50 a barrel. What does this mean for disclosures? This is a Publish What You Pay conference. So what does this mean for disclosures? First of all, it's very important to keep fighting for contract terms and supplementary documents, as we're already doing, but I think this is even more critical in case governments are giving tax breaks where they shouldn't do. Ideally, real-time reporting on any tax incentives that governments are giving. And ideally, disclosures of the estimated break-even prices for upcoming projects. That then we can tell whether tax breaks really should be given on projects or not. So I hope that was useful. Back to you, Nelly.
Thank you, David. I appreciate that. I think it was very informative. One of the things I think you really emphasized was that the oil prices could rise, speaking in the context of oil and gas. And so, issues like tax breaks should be looked at very carefully. And one of the things I think you did emphasize was tax breaks for operating projects is not needed. I will ask, I don't want to take up a lot of the speaker's time, but I'll ask Mutwalo to come in now because I think you also want to speak to some of the issues that are, currently being debated on in this season, if I should call it that. But I guess you'll be speaking generally also, maybe considering also the mining sector. So please go ahead and share with us your thoughts on these issues.
Nelly, I'm hoping you can see my screen.
Yes, you can make it full screen. I can see it. I think everyone else should. Yeah.
Thank you very much. My name is Mtolo Msoni. I'm a global tax advisor with ActionAid, and I'm happy to contribute to this session of the Pan-African Conference of Illicit Financial Flows. I think I should first of all start mentioning that ActionAid recently published an extractive taxation policy brief, which we had been working on even prior to us being in pandemic mode, which tried to answer some of the questions around what countries need to do to optimize their revenues from the extractive sector. And I'm going to be speaking to some of those aspects that the policy brief that we had developed talks about, as it's reflected on different tax frameworks, different tax instruments, trying to answer a question of which ones will better fit aspects of revenue optimization. I think for starters, it's important to mention that with or without COVID, extractive resources form part of our capital wealth. So we basically become poorer if we extract and we don't retain the value of the resources. Extractive resources are finite. Of course, they cannot be replaced with or without COVID. We do know that extractive projects require significant upfront investments, which speak to some of the incentives that companies lobby for. And we do know that extractive projects come with sizable environmental and social impacts. So we need to have that in mind, even as we are looking at taxing them and trying to incentivize and keep the sector alive. For the mining sector, the impact of the coronavirus is quite interesting and extremely different across some of the commodities that are traditionally extracted. We can note from the slide there that for gold and uranium prices, they've actually seen an increase over the period where we've had this pandemic compared to other resources that are traditionally extracted in Africa, like uranium, cobalt, copper, diamonds, and iron. So we can already see from this slide that if we're going to talk about aspects of revenue optimization, we need to pay particular attention to specific resources that are being extracted, because the impact of the COVID, of course, hasn't been the same across all commodities. Of course, the coronavirus had come with its disruptions to supply chains. Of course, with the lower prices meant lower revenues from government. This affected countries differently. For some of the countries that are dependent on the extractive sector for their foreign exchange, earnings, of course, we saw a decline in terms of the value of their currency. We saw countries making projections of losing lots of revenues because of the effects of the COVID on the extractive sector. Countries like Nigeria talked about 70% of the anticipated revenues being lost. Of course, that's in the oil and gas sector. This slide basically talks about how dependent our countries are from extractive resources. And as you can see, quite a number of countries depend on extractive resources for their contribution to their export earnings and contribution to revenue. So for countries like Guinea, Zambia, Democratic Republic of Congo, which generate about 30% of the extractive resources, extra revenues from the extractive sector, would anticipate naturally that they would have less of these revenues coming in. Countries like Mali, Burkina Faso, and Niger that are into gold and uranium extraction, on the other hand, would expect that they would be generating more revenues. But then this is also dependent on aspects that I'll be speaking to say the amount of revenues you're going to generate is also dependent on how you frame your fiscal framework governing extractive. There are different policy objectives across African countries and countries that we looked at. And the different policy objectives speak to most likely what tax instruments countries are going to have in their fiscal framework. And for countries that are looking at lowering administrative burden, there's lots of emphasis to try to collect royalties and early payments such as bonuses. For the ones that really want to optimize revenues and answering the question of how do we optimize revenues, we'll basically look at probably resource rent taxes, corporate income taxes, variable profit taxes, and so on and so forth. Sliding royalties have also been used more recently to try to bridge the gap between governments failing to optimize revenues from the extractive sector and wanting to have at least a visible share or an increasing share of taxes when there's an increase in commodity prices. But I should emphasize that if you want to look at aspects of optimizing revenues post-COVID, like David made mention, while you have the price recoveries, you have companies making more profits, there should be lots of emphasis on collecting profit-based taxes or taxes that are not blunt and would probably reach the base of a minimum return to capital. David made mention about the importance of having progressivity in terms of tax instruments. And of course, we do share the same thoughts that for countries that have more progressive tax instruments that adjust to different circumstances, that speak to commodity prices, speak to the aspects of the revenue generation by companies, are most likely to actually get an optimal share of revenue. So basically, this slide speaks to the aspect of progressivity and increasing government share as profitability of the project. And of course, the tax instruments that you'd want to really emphasize on and look at if you want to collect an increasing share when we are post the pandemic, if you want to collect an increasing share in the case of Burkina Faso, in the case of Guinea, in the case of Niger, from the increase in the gold and uranium prices, you would want to look at progressive tax instruments. So, of course, progressive tax instruments will probably be speaking to the ones that are based on profit, and then answers the question of how do we sort out the aspect of establishing how profitable a company is and how much they're supposed to actually pay in terms of revenues. I've picked out two examples of what you would consider typically as an element of a progressive tax instrument. The first being a case of Zambia, which tries to have a sliding instrument or royalties for the mining sector for copper production. So when you have higher copper prices, Zambia tries to collect even more royalties from the extractive sector. If you have low copper prices, they try to collect low. But I think it's important to mention that this is some form of incentive that would incentivize the amount of taxes that companies would be paying, especially in periods of low prices, but would not effectively reach potential resource rents that projects can generate beyond the pandemic. The case of Peru is usually used as a case of portraying what would be a typically progressive tax on profitability, which looks at an RR ratio, which looks at cumulative revenues that come from the project and the cumulative cost over time. Of course, increasing when the RR factor is greater than 2. ActionAIDs looks at progressive taxation in two ways. And it's important to mention that for the small scale mining sector, progressive taxation for them and revenue optimization would mean different from the big tax payers and the projects that are run by multinational corporations and pay dividends to shareholders. For the small scale sector, of course, you would want to frame your tax framework in such a way that for the ones that extract less, they pay way less, and the ones that extract more from the sector pay more. So this is more like having your progressivity pegged on the form of production that's happening in the small scale and artisanal mining sector as a way of supporting them. Because essentially, if you calculate the actual cost labor that goes on in the extraction, you would find that this is way above the actual revenue that comes in. For the Publish What You Pay campaign, I think what is important in ensuring that you have optimal collection of revenue, of course, is to basically continue calling for transparency in the extractive sector. Transparency, of course, is key. Transparency would help us negotiate better deals. Of course, now we're talking about the EITI standard, including aspects of contract transparency beyond 2021, but how these contracts are negotiated will still go down to the level of transparency. Of course, most of us should be familiar with the case of the Cinco mines in the Democratic Republic of Congo, where Chinese projects, Chinese government entered into a deal with the government, promising infrastructure projects that have not yet been delivered in exchange for mining rights. With transparency of such deals, of course, would be in a better place to negotiate and get better deals. It's important to mention that in as much as we are talking about profit-based instruments being better placed to optimize revenues, there are a couple of countries that have tried to introduce profit-based instruments in the legislation and have collected zero revenue. A typical case is that of Sierra Leone. Zambia as well introduced a variable profit tax, raised zero revenues during a period when copper prices were fairly high, and this is the case across most countries. But it's important to mention that once we deal with aspects of potential cost manipulation, once we negotiate our tax frameworks and contracts better, once we deal with the aspects of under declaration and under valuation of production or sales, once we deal away with abusive incentives and have good legislation that speaks to aspects of base erosion, profit shifting, have thin capitalization rules, and build the administrative capacity of administrative system, then we can be able to optimize revenues. Of course, there's lots of talk about profit-based taxes being quite difficult to collect, especially in the African continent. But I think it has to deal with most of the discussions that we'll have over the week in the Pan-African Conference, which is sealing the loopholes and, of course, increasing administrative capacity to actually be able to establish the actual cost of operation for companies and being able to deal with aspects of transfer pricing, which have been talked about over time. I have a few examples of how this has been playing out over the years. The Finance Intelligence Center report for Zambia reported one company having to have subcontracted and managed to pay significant amounts of revenues to its sister company to do some works at the mine, which happened to be at a cost which is way lower than the actual cost. So this involved about 7 million kwacha. The works were worth 100,000 kwacha. And of course, in the company books, it reduces their profitability and increases their costs, and they will do away with paying taxes in such a way. There is another incident that's shared on the slide, also from a Zambian mining company, that apparently gave a contract to its sister company to do some works at the mines worth over $2 million US. The works were worth 265, and a local company was contracted by its sister company to carry out such operations. So these are just a few examples of some incidences that would happen in country, and if not dealt with, we would have a problem with collecting the actual taxes that speak to revenue optimization. Aspects of incentives have been touched on. I think I won't touch much on this, but most African countries, as you can see, have some incentives that they have in the legislation, which speaks to aspects of optimization. You don't expect to optimize revenues from the extractive sector if you have over generous incentives. David had presented a slide of the concept of break-even, where a company can actually still be making some profits given different prices for the commodity that they are selling. So we do share the thoughts that most of the incentives across the African continent are over generous and are based specifically on profits, which inhibits the ability of the countries to generate revenues from tax-based instruments, and as opposed to incentives, which would probably be more appreciated this time on COVID, which speaks to the cost of operation, depreciation costs, aspects of bringing in machinery. Most countries stick to having to incentivize the profits of the companies by giving tax holidays. We have a report that specifically looked at Paladin Mine in Malawi, a 2015 report that showed on how aspects of tax incentives can be able and should minimize countries' ability to generate revenues. And in this particular case, it focused on Paladin Mine, which lost significant revenues because of tax incentives and also loopholes in the legislation, which allowed management fees and service fees to be paid at non-arm's length price to related parties in the US and in Australia, resulting in significant revenue loss for the Republic of Malawi from this particular uranium mine. A few recommendations from our end would be, first of all, I think it's important to have the right tax instruments if you want to optimize revenues. You don't expect to optimize revenues if you don't have the tax instruments that are speaking to profitability. Secondly, once you have the tax instruments, you have to have the administrative capacity to actually collect from these tax instruments. I mentioned of the variable profit tax in the case of Zambia, collected zero tax while it was introduced. So you can have the tools, but if you don't have the administrative capacity to do this, you can't really do this. It's important for the government to set up strong anti-avoidance rules to ensure that they're able to collect some of these taxes. A recent study around thin capitalization sector showed that there are very few countries that are actually following the debt to equity ratio rules in terms of thin capitalization, but at the same time, there have been no punitive measures from the government to ensure that companies are not reducing their tax liability by making use from inter-party debt. I had touched on the aspect of transparency, which has to speak to probably calling for beneficial ownership disclosures, probably more disclosures in terms of cost of operations from the Extractive Industry Transparency Initiative report and country by country report. With that, back to you, Nelly. Hope my slides were helpful.
Thank you, Mutwalo. I noticed that I did not provide your bio or actually introduce you earlier, and I didn't flag it to you as well. But for those of us who have not met Mutwalo before, he's an economist with experience in statistical analysis and economic data, research particularly on extractive and extractive industry and governance. Is also as EATI civil society member and sits on the global EATI board. Thank you, Mutwalo, for the presentation. It was very informative. And I think one of the things that I was looking at also from your information is that about the issues around mining revenues dropping, reflective of some of the other countries. that we may not really dig into here. But I remember, I think in the study or the publication that David was sharing also, there was an issue around countries that also went, they didn't stop production during this period. And so it looks like, some of those countries would actually be the ones to determine the prices when things stabilize. So there was also a bit about that David was talking about, that prices will rise, but then who sort of determines that at the end of the day? So I was trying to think about that so in context to what Mutwalo is saying about the challenges that some of the countries are facing at the moment with revenues dropping. Thank you for that. I'll invite our next speaker, Rachel. Rachel works with Hakira Silimali in Tanzania, which is also the publisher to pay to speak a lot about some of the issues that you're dealing with as well in this current context, especially and the impact of COVID also on the extractive sector in Tanzania. Rachel sits on various boards and committees, and also as the Tanzania representative, EITI multi-stakeholder group committee as a representative from civil society representing the Publisher Chipe constituency. She's also part of the technical team for the development of the extractive sector technology transfer incubator in Tanzania. You have a very rich profile, so I'll not read the whole of it, but you're free to add a little bit more about yourself as well. But you can go ahead as well and share, and I know you'll be speaking a lot more on what's happening in Tanzania at the moment. So over to you, Rachel.
Thank you so much, Nelly. Thank you, David and Mtwalo, for good presentations made. However, my presentation will be a bit very focused, giving a context of Tanzania, and I will also be sharing more on some of the studies that we have undertaken during this period of COVID-19. If you may allow Nelly and participants for me to switch off my video because of my internet shake, I'll really appreciate. But again, I hope everybody will be able to follow up on some of the slides that I'll be sharing with you. Yeah, so, okay.
That's so fun. Thank you.
All right, as I said, my focus will be mainly in Tanzania and looking at what happened between pre and during COVID. And I'll not touch mainly on issues that have been highlighted as David said, but also Mtwalo. But rather for me, I would like to focus more on the production part and also on the prices part of the extractive sector. As an overview is that my presentation is not going further. I don't know. It's not playing next. Why? Hello?
I don't know if it will, okay.
Okay. Yeah. So,
yeah, good. That's fine.
Thank you. First of all, is that Tanzania has maintained its extractive sector-related fiscal regime with a bit of amendments in different policies that have introduced the definition of beneficial ownership, but also issues that are related to VAT and tax in general. However, when it comes to the state of COVID-19 and the extractive sector in Tanzania, is that, first of all, it's good for everybody to understand that the extractive sector in Tanzania, mining oil and natural gas, is expected to be a catalyst for the development of economies in Tanzania. We are looking at the sector as a catalyst for an industrial state. And there have been so many responses in terms of ensuring that the country maintains, contains the virus, but also ensure that there is an economic recovery. And this has considered a number of issues such as human rights, looking at employment-related issues, but also issues that are ranging from revenue collection up to vulnerable communities in terms of their health, safety and security, but also the general environment. So if you look from the statistics, and I think Tanzania is an interesting case, it's that up to May 2020 this year, we only had 509 confirmed cases. And out of that, 183 were confirmed recovery, but we only had recorded 21 cases. So a number of approaches that the government was able to induce during this period is that we had no lockdowns that were imposed. That this is different from most of the resource-rich countries, but also there was push for social distancing and hygiene practices. We had strong emphasis on religious faith and the approach to use traditional herbs. But again, if you go down to extractive-related companies, there were screening centers and quarantine that were that could incur on cost to quarantine or isolate yourself. But again, the other interesting is that during the pandemic, the government offices were continuing to operate, whereas the private sector and civil society were working remotely until June, July this year. But the other thing is that the overall socio-economic impact of the pandemic for Tanzania is not yet known, but will be felt, could be felt in many years to come. So given the influence of the pandemic, as I said before, we are likely to face short, mid-term and long-term socio-economic impacts. But the country's economic outlook is not pessimistic, as faced by many countries. For instance, could give an example, South Africa. A good example, it's on gold producers who have been benefiting from the high gold prices, despite the operational challenges that we also have were felt within the extractive companies operating in Tanzania. And these were because of the ban on international flights, but also transportation restrictions that highly disrupted the import of extractive-related equipment plus services, but there were no any records in regards to any financial difficulties that have been faced by the sector operators. The other interesting thing to understand is that during this period, there's also been an increase in revenue correction that is mostly geared by the boost of the artisan and small-scale miners subsectors in Tanzania. So there are a number of records that Tanzania has recorded the increase of revenue collection from the small-scale mining sector. So looking at the potential economic impacts assessing from June 2019 to June 2020 is that during the period that you're discussing right now, we have been able to observe fluctuation trends in the extractive sector production. This is due to, it could be due to COVID-19 and the imposed restriction. However, if you look now at this first graph that looks at the gold quantity, you could see that from around October 2019 up to June, there has been a change in the quantity and in the quantity of gold production. That's also impacted the prices accordingly, according to the month. However, mining companies under this phase are anticipating that it could take up to 6 months to begin to regain the momentum and restore their full production. The fluctuations in the gold production and the decrease from November, for instance, where we had a decrease of almost a decrease of 1%. $3 million to this because again markets were overwhelmed and there were no opportunities to sell their produce outside the country. With fluctuations in prices, June 19 to January 2020, it seems to be satisfactory with an increase of about 1 to 6 growth rate, which stands to sell at 43 US dollars up to 48 US dollars. That means it has been able to create a stable price for Tanzania as most of the international buyers have put more efforts in investing in the mineral products during the pandemic. The other interesting thing that I want to look also on Tanzania, you may find that I've been citing, I'm using specific cases. So I started with gold, now with Tanzania, that the government had put so much emphasis on during this pandemic. So this is what I'm presenting in front of you, it's the production comes to Tanzanite, but also the sale of Tanzanite. So Tanzanite, a blue gemstone, accounts for a majority of the value for domestic gemstone that is mostly undertaken by the ISM sector. But however, as the case with the gold, we have seen fluctuation in the production from December 2019, and as the lowest recorded around April, as compared to November 2020. So what does this mean? This means that despite the prices of gemstone had been decreasing even before the outbreak of COVID-19, the power of insecurity against smuggling, leakages, and limited capital and external market dependence caused the prices to decrease. So COVID was not a bigger factor to ensure that there is a price reduction, but also there has been significant growth of about 61.1% in terms of the sale. What does this mean is that the fact that there was a ban of restriction, the government was also able to buy some of this produce direct from the ASM sector. That also ranged from a rate of 61% from that ranges of $82 to $282.6 in the period that is being discussed. However, this also indicates a shaky and unstable price, though there are other factors that could have affected the prices in the Tanzanite sale. One could be also, as I said before, is the travel restrictions, because most of this produce was being sold by buyers from Thailand, of which during the pandemic they are not able to come to Tanzania and get Tanzanite from the ASM sector. But there's also a growing demand for Tanzania in the country to use Tanzanite as a wild cut that could affect the prices in the future. A lot could depend on the recovery of the market, such as in the US, and the buying power of the middle class kind of consumers. Looking at overall gemstone, however, is that we have observed that there has been high production in June 2019 to about 810, while the lowest production was observed around March 2020. So you find most of the decrease in whatever that have been said have been happening between February to March. And this is because at that point, the COVID-19 was at the peak and there were strict travel restrictions. But at the same time, we see high production in April to June, which was due to effective improvement in the mineral production laws and regulations, monitoring system, as well as the marketing system. So the government had engaged itself in ensuring that they provide mechanisms for ensuring they buy direct from the miners. Thus, an increase in the revenues as observed in different phases of the government reports. However, prices of gemstones around August now to around June have also been fluctuating. Have also been changing. Again, we see that around July we were able to sell at a cost of $335, while the lowest was being at $7 around April 2020. So that is a brief from the mining sector. However, from the oil and gas subsector is that, first of all, there are very few operating oil and gas firms such as Pan African Energy, of which exploration and production of natural gas have not been affected greatly by COVID-19. This is due to the fact that most of what is being produced, especially the natural gas from the onshore, is being sold direct to local markets. So, and this has, the price to sell at the local market has been determined by the government of Tanzania, which has not been affected by the international markets. But however, even before COVID-19, there were laid back processes in terms of negotiations around development of LNG and eco-plated projects, and it became also tighter or stalled back by the fact that now most of the oil and gas companies had to close their offices and they're operating from home. So there have not been any changes, or there could be no impact in terms of government revenue apart from the expectation of the FDI that was supposed to be received from the LNG-related projects. So looking at general trends in government revenue collection is that with COVID-19, there could be major decline in tax revenues in Tanzania due to economic slowdown and the measures that have been taken to respond to the pandemic related to tax and policy administration. With economic slowdown, we look at overall Tanzanian collection, not specifically to the mining sector, is that if you read through the government reports, you find that some of the strategic sectors, including the extractive sector and tourism, were greatly hit by COVID-19 because of travel restrictions, and any observed decrease in the government revenue, especially in the extractive sector, was a result of the closure of several companies. We also noticed that in our study that some of the companies, for instance, Caspian closed its company, but also they laid off some of the operational activities following the existence of COVID-19. Thus impacting on the markets and the general supply of goods and services in Tanzania. So it just did not only go beyond production and prices, but it affected the whole supply chain, and that means distorting the spirit of local content in terms of local goods and service supply. But again, we see there is a high risks in terms of investments, and that could greatly affect on domestic direct investments and foreign direct investments. But in this context is that we see that with the pandemic, the FDIs have been greatly affected because the sector for Tanzania is highly dependent on foreign investors. As I've already said, for instance, in the oil and gas subsector, there have been installation of negotiations around the LNG project, which could have increased on the FDI collection in Tanzania. But because of prolonged negotiations, even after COVID, that means they will not be able to assess the amount of FDI that the country has received at this point. But that, what does it mean is that most of this funding that we expect from the extractive sector, it's supposed to be supporting some of the development projects that have been planned in the country through the budget processes. So if now it's going to be challenging to implement some of the development projects, that means provision of services to Tanzanians is going to be hindered. To the end, the government, for instance, from July 2019 to June 2020, was able also to, as I said before, despite the changes that we see and the anticipation to decrease in revenue collection, but there has been significant revenues from Tanzanite, especially, of about 1.6 million Tanzanian shillings, but also we have also seen maiden payments of dividends from the Twiga Minerals. Twiga Minerals, this is the joint venture between Barrick and Tanzania, which was paid a few months ago. And also we are seeing return payments by the State Mining Corporation in Tanzania. So at the end of the day, what does this mean is that if we have such records that are being put in place, this will have to be reflected in the EIT-related reports in Tanzania, so that we can be able to assess the impact of tax and revenue collection amid COVID and post-COVID. In terms of social impacts, I'll not speak so much here because, as I said, our numbers were a bit very inadequate. But as you look at the figure, is that these are regions where most of the extractive activities take place in Tanzania, and you can see the numbers of cases that have been reported. But to what extent has now COVID-19 disrupted these communities is that most of these regions were less affected. But however, there was limited awareness among communities, and because most of these communities are mainly dominated by ASM sector, with the operation, they continue to operate in a usual business with poor ventilations in the mining shafts. That means likely to increase the impact of exposure if this cannot be contained, but also we observe a high level risks of resources to vulnerable communities, especially women who also take part in the extractive sector value chain, because should cases increase in these regions, that means women will be greatly impacted in a sense that they have to stay back home and take care of the families. At the same time, they have to provide. Also, the other thing is that the ASM sector in Tanzania by practice is the hand-to-mouth kind of business. So with the destruction of the global markets and also markets in Tanzania, most of these ASM-related communities have faced the consequences of the COVID-19 in terms of the profit that they were expecting to receive. The same goes with labor. Looking at employment, is that our Tanzanian policies in terms of employment do not recognize issues beyond pandemics. So for those employees that were cut off during this period, there could be legal consequences in terms of their employment rights. So there is need for future in Tanzania, but also other resource-rich countries, to ensure that labor policies address issues beyond the pandemics. So in terms of conclusion, is that in overall assessment, we find that Tanzania has had a stable and controlled status of COVID-19 in the extractive sector due to improved COVID-19 status, but also moderate impact on production as reported. The other thing that we have seen is that existence, operation, and effective response and mitigation intervention against COVID-19 is key, especially now that Tanzania has effective national policy issues that have now addressed response beyond pandemics. Few cases being dealt with immunocompromised employees employment and education. It is something that we have seen that being undertaken in Tanzania, but also there is a moderate risk for prices for some of the selected minerals, as I said, and resources. I say some of these resources or products, their prices are being determined by the government of Tanzania. For where we have seen challenges, let's say in the ASM sector produce, the government has been, however, able to buy direct from them. However, now there is need now to ensure that whatever that the government is taking with these strategic minerals should go beyond also other gemstones. The issue of risks for dependent communities I've already explained. So in our study, what we are recommending is that there is need to strengthen the availability of capital equipment to the local miners to enable them to produce at the maximum level. But also the government of Tanzania needs to strengthen the established monitoring systems and also all control systems so as the country continues to benefit from mineral-free smuggling zones. Also need to assess its current fiscal regime and to the extent in which now extractive-related companies will be paying taxes in the near future. So our outcry will be in the interest to look at the new EITI Tanzania report and the extent to which companies would have reported. An interesting issue of concern also for civil society in Tanzania is the documentation of revenue streams, especially under the new framework agreements that have been happening from end of last year up to beginning of this year, and others that are still happening. For instance, with the complete negotiations between Tanzania and Barrick that have already paid almost 250 million maiden dividends and settlement dispute. To what extent that will be reflected in the EITI report, for us it's an area of concern, and also calls for campaigns under publisher to pay. Lastly, more effort also needs to be put to all potential stakeholders to ensure that they have spaces to debate and the establishment of appropriate gender response policies on disaster management that could future the extractive sector. This will add more effort to fight against violence and discrimination to women and all working places at large. The report has not yet been published, but I hope by end of Friday this week, we'll be able to share with you a comprehensive summary of this report and allow me to submit some of the abstract of this report. Thank you so much.
Thank you, Rachel. I was trying to get you to wind up very quickly as you had eaten into Fatma's time. So I'm hoping that the next 15 minutes will be enough for Fatma to finish to present. But thank you, Rachel. I think that was also quite a comprehensive discussion, and I see quite a bit of questions and comments in the chat. But I'm also encouraging participants to use the Q&A because the questions could get lost in the chat and we may not be able to pick them up. And so, Rachel, if you see some questions forwarded to you, please take note of that. Fatma, we're kind of running short of time, so your 15 minutes, if you can be able to present. We have Portuguese, of course, now it will be to English interpretation. Unfortunately for the French, there was a technical issue, so we're not able to add the French interpretation. So Fatma asks that she presents in Portuguese, and then there is an interpretation for Portuguese. But very briefly, Fatma is based in Mozambique. She's the Budget Monitoring Forum Coordinator, coordinating a 5 years project financed by EU on budget utilization for the benefit of people. But I know Fatma is also an active member of the Publisher Chipe Coalition in Mozambique and has quite a wide experience in the extractive sector. So Fatma, I will have to tap you at some point in case the time goes by so fast, but please go ahead and share your presentation. Thank you.
Thank you so much. Well, I'm quite divided if I speak in Portuguese or in English, but I will do in Portuguese once we do have translation. I will start with a summary of the COVID impact in the extractives in Mozambique, but I will run to the context of taxation in Mozambique, bringing in a specific example of the LNG project that would be implemented in Rovuma Basin by Total now was Anadarko Pass. So just you to understand some of the points that I will be raising on the impact of the COVID. Antes de mais, talvez dizer que a Covid-19 afetou o progresso de alguns projetos em Moçambique, com destaque para os projetos da Bacia do Rovuma, liderado pela ExxonMobil, que se viu obrigado a rever os seus custos em 30%. E, como consequência, a decisão final de investimento foi adiada sine die. Portanto, deveríamos ter tido essa decisão final de investimento tomada no primeiro semestre deste ano. Eles fizeram o postpone para o segundo semestre deste ano, mas agora ficamos a saber que, afinal de contas, efetivamente não vai haver tão já decisão final de investimento da ExxonMobil. A Total teve de suspender um pouco das suas operações, porque alguns trabalhadores ficaram infectados, uma situação que rapidamente levou a província de Cabo Delgado a ser declarado como uma zona de grande contágio. No setor mineiro, onde nós temos o carvão, os rubis, as areias minerais pesadas, as empresas tiveram imensas dificuldades de exportar os seus recursos, uma vez que os mercados estavam encerrados. Portanto, houve um fechamento daquilo que é a atividade econômica e comercial entre os países, e especificamente em relação ao carvão, que é o maior contribuinte neste momento para as receitas do Estado. Houve grandes quantidades de carvão que ficaram estacionadas no porto, e isso teve influências naquilo que é a estrutura de custos da empresa. O armazenamento, o tempo que o carvão fica no porto à espera de ser embarcado para os navios é um custo, e neste caso ficaram vários meses estagnados, significando custos significativos. Uma análise feita pela Confederação das Associações Econômicas de Moçambique indica que, de uma forma geral, a Covid teve um impacto na estrutura de custo das empresas, que aumentaram entre 30% a 50% por conta da implementação das medidas da Covid. E também esse mesmo estudo refere que 500 pequenas e médias empresas que têm negócios diretamente com as empresas do setor extrativo, mineiro e de LNG, foram afetadas diretamente, tiveram os seus negócios fechados e mais de 300 trabalhadores diretos perderam os seus empregos. Em termos de receitas fiscais, de acordo com o relatório de execução do orçamento do primeiro trimestre deste ano de 2020, as contribuições do setor mineiro para as receitas do Estado reduziram em 13,9% ao longo do primeiro trimestre. Isto é uma queda bastante.
I think the network is not very good. Maybe what I'll tell Fatima is to switch off her video when she gets. Okay, sorry about that. Fatima, are you there? The network has gone off. Fatima is still there? I think we've lost Fatima there. Okay, in the meantime, as Fatima tries to sign back in, she's back. Fatima?
Yes, I'm back, sorry.
Sorry, but I was going to maybe say that you switch off your video and just maintain the screen, the sharing of screen.
I will do so. Yeah, I switched off. So I was explaining that eu estava a dizer que dos grandes desafios que Moçambique tem e que está claro ao nível que vários estudos demonstram, é que existe uma fraca capacidade do Estado para fazer a supervisão adequada dos projetos. E, por consequência, existe um risco muito grande de inflação de custos por parte das empresas. E aqui, por causa da Covid, onde as empresas reivindicam que tiveram um incremento de custos de 30% a 50%, é importante que o Estado possa fazer a adequada aferição desses mesmos custos, sob o risco de, no futuro, nós termos de reembolsar custos que empresas não incorreram efetivamente. Desde 2000, eu quero demonstrar isso, que desde 2014, o Instituto, o Tribunal Administrativo, que é o nosso auditor-geral, tem estado a demonstrar que o Instituto Nacional de Petróleos, que é a entidade reguladora do setor, não tem estado a fazer a monitoria adequada dos projetos extrativos. E, como consequência disso, muitas empresas vão recuperar custos que não deveriam recuperar porque a empresa ou o regulador não fez a aferição desses custos dentro do prazo que está fixado nos contratos, que é de 3 anos após este custo ter sido incorrido. O que isto significa? Isto significa que, se hoje as empresas estão a dizer que implementaram medidas para conter a Covid e, por causa destas medidas para conter a Covid, elas tiveram um incremento dos seus custos, o Estado tem de ir verificar para a passo cada um desses custos para certificar que, de fato, são custos que são permitidos a incorrer no quadro daquilo que que são as garantias que o Estado atribui. Eu gostava de também falar, um dos convites que nos foi feito era para falar um pouco sobre a importância da tributação no setor extrativo. É importantíssimo porque é a forma como o Estado monetiza um recurso. É a forma como o Estado obtém ganhos para financiar os seus planos de desenvolvimento. O que acontece, ou o grande desafio à volta da tributação, é que ele tem de ser, primeiro, transparente, portanto, o regime fiscal tem de ser transparente, em primeiro lugar. Em segundo lugar, ele tem de ser justo e, em terceiro lugar, ele tem de ser isento. O que nós vemos no caso de Moçambique tem um regime fiscal que mistura impostos específicos e mecanismo de partilha do gás natural. E o que nós vemos é que existe uma certa inconsistência do ponto de vista da forma como os impostos são tributados. Por exemplo, se a gente olha para o quadro fiscal, a legal fiscal que existe e compara o quadro legal fiscal com aquilo que são os acordos ou os contratos que o governo firmou com as empresas, nós vemos grandes discrepâncias. Aqui, por exemplo, no imposto de produção, o royalties, no caso do gás natural, nós temos, de acordo com a lei de 2014, que foi revista em 2017, a taxa de incidência ou do imposto é de 6% do gás produzido, mas o contrato que foi assinado com a Anadarko na altura, que agora foi substituída pela Total, o imposto de produção e a taxa do imposto de produção que vai ser tributada é de 2%. Portanto, estamos a dizer que temos uma queda ou uma perda de 4%, porque o Estado negociou 2% da taxa com as empresas. Isto porque o argumento que se usou na audido é que foi descoberto, e isso significa que tem custos muito. Are you hearing me? Hi, Nelly? Hi,
yes,
Nelly.
we can hear you. Yeah.
Oh, thank you. Thank you. Então, isso tem, de acordo com o governo, os 2% são resultado da área ou da zona onde os recursos foram explorados. Então, era preciso facilitar para as empresas. Este é um aspecto. Quando a gente vai e olha para o imposto de rendimento de pessoas coletivas, portanto, income tax, nós vemos também uma certa discrepância. Por um lado, nós temos uma lei que estabelece a taxa de 32% sem reduções. Portanto, não se fazem reduções na taxa que é aplicada. Entretanto, o contrato da área 1, que prevê como a taxa principal de 32%, no entanto, o governo acordou com estas empresas uma redução de 25% do rendimento líquido por 8 anos, significando que, no lugar de pagar 24%, pagar 32%, a empresa vai pagar apenas 24% durante 8 anos. Isto é um nível de perda muito grande em termos de receitas para o Estado. Por outro lado, nós vimos que o Estado facilitou muito do ponto de vista de medidas de recuperação de custo, de amortizações para as empresas, que são bastante discrepantes. De projeto para projeto varia o nível de recuperação de custos, e mesmo ao nível do próprio modelo que o Estado estabeleceu, o nível de recuperação de custos varia. Por exemplo, neste momento nós temos um nível de recuperação de custos total, que é de 60% atribuído, mas ao nível dos projetos da Bacia do Rovuma, no caso concreto deste projeto que nós analisamos, é de 65%, mas os mecanismos de amortização, eles tornam ainda mais elevado esse nível de recuperação de custos, porque a empresa é permitida quase que a recuperar tudo que ela investiu. Em termos de mecanismos de partilha de produção do gás, nós vemos que, enquanto a lei de 2014 ela fixou, tornou transparente, tornou menos discricionário, tornou inegociável os termos em que o Estado e as empresas partilham o gás natural, na Bacia do Rovuma há uma estrutura de partilha onde a empresa começa com uma cota de 90% e termina com uma cota de 40% e o Estado começa com uma cota de 10% e termina com uma cota de 60%, significando que os maiores ganhos ou o gás lucro vai ser significativamente recebido pelas empresas nos primeiros anos, quando ela tiver níveis de produtividade muito altos, e nos anos que seguem o Estado recebe mais, mas os níveis de produtividade já estão com uma tendência quase que decrescente. Então, isto também pode fazer uma erosão àquilo que são os ganhos para o Estado. Por outro lado, o nosso quadro legal inclui também mecanismos de bônus. Portanto, há bônus que são aplicados pelo Estado. Esses bônus, felizmente, não são custos recuperáveis, mas o que preocupa em relação a estes bônus é que eles são negociados de forma arbitrária, não há nenhum mecanismo na lei, não há nenhum mecanismo nos contratos que estabelece as balizas. Por exemplo, se comparar os bônus de produção que a Anadarko e que a Total agora e a EN tem de pagar a dever grandes diferenças, sendo que a Anadarko ou a Total ela tem bônus mais altos a pagar na mesma estrutura de produção comparado com a EN, o que levanta questões sobre o poder ou negocial do Estado, a posição que o Estado assume no momento em que está a negociar os contratos. Temos também contribuições que são feitas ao nível dos, que estão previstas ao nível dos contratos, não estão na lei, mas estão nos contratos, e estas contribuições constituem custos recuperáveis, significando que a Anadarko ou a Total paga por ano, em média, 4 milhões de dólares ao Estado moçambicano, que deverão ser devolvidos, portanto, como custos recuperáveis. A questão à volta disto é que não está claro, primeiro, o mecanismo de definição desta taxa, segundo, não está claro como é que o Estado usa estes recursos. Aqui fala-se de contribuições para fundos sociais, de capacitação institucional, fundos de projetos sociais, contribuições institucionais. Entretanto, os relatórios do EITI demonstraram que nenhuma destas rubricas recebe 4% destes valores. E o INP, que é o regulador do setor que recebe estes dinheiros, nunca prestou contas sobre como é que utilizou esse dinheiro. No entanto, este é um custo recuperável. A nossa suspeita é de que este tipo de contribuições é uma espécie de upfront payment, onde o Estado recebe sobre o argumento de contribuições, mas que essas contribuições nunca chegam efetivamente a ser realizadas e fica no bolso de algumas entidades ou é utilizado para financiar o orçamento do Estado. E aqui há uma questão de transparência importante que é chamada, primeiro, sobre a forma como se determina, segundo, sobre a própria gestão dessas receitas. Por último, quero falar daquilo que são os interesses participativos do Estado. De acordo com a nossa legislação, o Estado participa nos projetos representado pela nossa Empresa Nacional de Hidrocarbonetos, que detém uma participação mínima de 10%. No caso da Bacia do Rovuma, que foi do projeto da Área 1, que é Rovuma LNG Project, que é coral, golfinho coral, a cota que a AN tem é de 15%. E esta participação é paga, sendo que na fase de prospecção e pesquisa ela é carregada ao colo, é free carried, mas em caso de descoberta do gás natural ou do recurso, e se houver avanços para a fase de exploração e desenvolvimento, a Empresa Nacional de Hidrocarbonetos tem de contribuir o investimento feito correspondente à sua cota de participação. Isto é um tanto quanto preocupante na medida em que nós estamos perante uma empresa pública que não tem capital, que não tem recursos e que estamos a falar de um setor com de bilhões de investimentos. Só na fase de prospecção e pesquisa, na área 1, implementada pela Anadarko e Total agora, foram investidos mais de 7 bilhões de dólares. 7 bilhões de dólares, equivalentes a 15%, é um bom dinheiro que Moçambique não tem para contribuir. Por outro lado, quando se avança para a fase do desenvolvimento, a empresa tem de pagar a sua cota parte em termos do investimento. Nós estamos a falar, por caso deste projeto, de um investimento de 26 bilhões de dólares, 1.000 milhões de dólares. E nós temos de pagar 15% desses 26 mil milhões de dólares. A pergunta que se coloca é onde é que vamos buscar esses recursos? Então, a forma como o Estado participa determina também muito a forma como o Estado vai ter ganhos, porque, por um lado, ou vai ter de se endividar, e ao se endividar, tem custos com o endividamento, sem contar que Moçambique está com uma muito má reputação neste momento por causa da questão das dívidas ocultas, significando que os custos do endividamento são muito altos. Por outro lado, se Moçambique entrar na estrutura de arrecadação ou de mobilização de recursos das empresas, corre o risco de ter de pagar mais do que aquilo que devia pagar. Qual é a nossa sugestão em relação à participação do Estado? A nossa sugestão em relação à participação do Estado deveria ser no sentido de termos uma participação livre.
Fatima, you have about 2 minutes to finish. Fatima,
okay,
2 minutes to finish.
Yes, I'm really about to finish. A nossa proposta em relação à participação do Estado é que a participação do Estado ela seja mínima, no sentido de 15%, como está o 10%, mas em que o Estado não paga. Lembrando que o Estado concessiona a terra às empresas e as empresas têm de pagar uma taxa por essa terra. Então, nós achamos que o Estado poderia usar o ativo terra como seu asset ou contrapartida na contribuição para a exploração. Existem vários modelos ao nível internacional, vários países em que o Estado tem uma participação free carry até em níveis tão insignificantes como estes, enquanto vai criando capacidade para no futuro poder a melhorar a sua contribuição. Finalmente, eu queria mencionar a relação entre tudo isto que eu falei do quadro legal com os desafios da Covid. O ponto é, se nós temos um sistema legal ou um sistema fiscal, um regime fiscal que é negociado de forma arbitrária, em que, apesar de existir a lei, ela pode ser negociada em termos em que o governo e a empresa acordarem, isso torna-se problemático. Por outro lado, numa situação em que o Estado não tem capacidade para fazer a monitoria do próprio setor e corre riscos de pagar no futuro por custos que não são recuperáveis, é importante que no quadro da Covid, em que as empresas vão usar a Covid como um argumento de terem incorrido em vários custos, estar atento a esta questão. Por outro lado, também é preciso lembrar, há um estudo do FMI que mostra que atraso de um ano da decisão final de investimento tem implicação em termos de custo, aumentando em $1 bilhão esses mesmos custos. Lembrando que a própria indústria já tem a construção das infraestruturas de LNG, já tem uma tendência de extrapolação de custos ou cost overrun de mais ou menos 40%. Então, isto significa que o Estado deve criar capacidade para fazer a monitoria adequada, a supervisão adequada do setor, sobretudo na aferição daquilo que são os custos que as empresas reivindicam, porque as grandes perdas que o Estado pode ter podem derivar das perdas que as empresas reivindicam, que às vezes nem existem essas perdas, ou dos custos que as empresas podem para poder pagar menos ao Estado. Portanto, a capacidade do Estado, como foi dito pelo Mutualo, é muito importante no caso de Moçambique. O nosso estudo demonstra isso e teremos em breve a oportunidade de partilhar mais detalhes sobre o sistema fiscal em Moçambique, os riscos, os desafios e as oportunidades que existem e também as recomendações que nós temos de apresentar. Muito obrigada.
Thank you, Fatima, for the presentation. Thank you for the presentation. We're kind of running out of time, so I know there are so many online events happening at this time. But I appreciate that to address some of the challenges you pointed out. I'm going to ask, there are a couple of questions in the Q&A, and I think David might have attempted to answer them. I just wanted to check if Mutualo is with us. I know Rachel is facing, oh, she's back, I think. Rachel, are you on? I know you are facing some internet issues as well.
I am on, but unfortunately, I've lost track of the comments.
Yes. I'm just going to...
I'm using my phone now, so I don't know.
Okay, so there was a hand up at some point, but I think the person left. I was going to give her a chance to speak, but I just wanted to ask David, there are a couple of questions that came through for you, and I think Mutualo as well. I don't know if you've seen some of the questions that are directed to you, Mutualo, that if you've not responded to them, you can generally speak on those. But David, there are a couple of things that came up from the chat. I know you've taken note of some. There's one that I see here on, I don't know, I think it's someone from Zim who has asked, due to climate change, a need for green mining when the prices fall, and would you advise countries to invest in oil like Uganda, which is at the infant stage? And then from Mutualo, what is the alternative market for emerald exports since our major market in India is in total lockdown? Then I haven't seen, I'm still looking at Tanzania questions. No, I don't see any yet, just yet. But if there are questions, you can see in the Q&A. I'll give David a chance, and then Mutwalo, you can come in as well. So David, you can use the opportunity to respond to the issues that have been raised, and as well as any sort of remarks, final remarks from your end on some of the things that are coming out from that discussion, and maybe also the other presentations from the other countries.
Sure. Yeah, so just on that question on should countries like Uganda invest in oil, given that there's the energy transition coming? As I said in the comments, I'm going to be releasing a report on this very question in December. So stay tuned and there'll be lots more detail on that. But the short answer is, I think it's important to just distinguish between the government investing public money in oil and gas and the government's allowing oil and gas to be developed by companies. Because the first means risking public money in an industry that is declining and is getting riskier. The second is risking other people's money. And so more and more, and it depends on the country, but more and more we're advising governments to limit how much public money they're investing, okay? And usually this is through the national oil company. But that doesn't mean that governments should stop oil extraction. And so I think taxing oil companies is still very, very important. And basically, and I guess this comes to my kind of final comments, it's still, even with the energy transition coming, taxing oil and gas is still critical. There will still be money to be made. But because there's so much uncertainty, governments need to make sure that they have tax policies that can ride this uncertainty, that they will, there'll be low taxes when prices drop, but they can tax the companies when prices rise. And critically, and I think a few comments were on this line, for the rest of us to understand what government's doing, it's critical as always to disclose contracts and have those contracts disclosed as soon as possible. There's a question in the Q&A saying, well, when should this be done? It should be done as early as possible. It's too late if the project's already operating, because one, the contract's been signed and it's very difficult to then change that. And two, much of the value, as one of the other presenters said, I think Fatima was saying, much of the production and the value is in the first few years of a project. So it can be too late if you delay analyzing these contracts. Yeah, that's all from me. Thank you very much. It's all been very useful.
Thank you, David. Mutwalo, I think I see a question. I'm not sure if you answered, but I haven't checked the answered bit, but you can speak to that. Have you seen any other questions?
Yeah, I'll speak to the first question that I answered, which was around how can governments deal with related party transactions. I think the first thing that needs to be there is a piece of legislation that speaks to related party transactions. Some African countries have chosen to go with transfer pricing regulations, which look at arm's length transactions, meaning that if I'm going to trade with my sister company, the trade should be the same if I'm trading with an independent entity. But you'd only see or notice which payments are meant to erode the tax base, which payments are meant to reduce the tax burden by having comprehensive audits for the mining sector. So some countries have dedicated units that look at auditing some of the costs that are incurred. These are inclusive of some of the costs that are bared in terms of management fees and service fees as well. Thank you, Nelly.
Thank you, Mutwalo. I think For the others, I'm not sure I see any question just yet. My network also was acting up, so I think I had some issues. There is a comment here. I think the argument that countries should stop extracting oil is not fair. I think, yeah, that was from Kate's submission about countries. I think for Madagascar, the case of Madagascar, I think the oil should remain in the ground, or the way they're looking at it, because they lack capacity and technology. And I think there is a comment here about that, or a rebuttal for that matter. I think that is it. I don't know if anyone wanted to raise their hand and speak. I can allow maybe a minute or two for last. I see learn more. You want to say something? I see your hand up. If you can speak, ask your question. I've given you, you should be able to ask a question now. Please go ahead. Learn more.
Okay, thank you very much. My name is Len Nyamtanga. I'm from Zimbabwe.
You can
Hello.
Go ahead. Yes, we can hear you. You can ask your question.
Oh, thank you. Mine is not a question. It's more like a contribution. Someone was asking, how can we deal with gold smuggling? So I've given 4 points. Number one, I say, let's simplify the formalization of the informal sector in the mining sector. Because if they are informal, where do you expect them to sell their gold? Number two, let's simplify issue of illicit financial flows, so that even a person in rural areas will understand it. Some of them, they do because they don't understand or they don't even know about it. Then number three, issue of political involvement in the mining sector. They are sort of like there to allow or to allow those things to happen. So mine was more like a contribution. I have more, but since you are saying we don't have much time, let me end here.
Sorry, thank you, Lanmo. I think you can always type your comments, rather additional points. I think you had pointed out some, you have put down some, and I think we'll take note of that as well. Any other person with a question or a comment that they haven't typed, or something that has come up now before we close? And then I can hand over to the speakers for just one final word before we end the meeting. I don't see any other questions. So I will ask Fatma or Rachel if there's anything you want to say based on what has been discussed now and some of the feedback from the participants. Otherwise, you can just say any final remarks and we close. Rachel, Fatma, are you still there?
Yes, I am. Well, thank you for the questions of the participants. Probably just 2 or 3 questions that I saw that are interesting here. First is about
any final.
Yes, it's about the decision on how to extract, if we start with assessment or not. My point is that the problem of African countries, the majority of our countries, is that all of them are starting or are increasing the concession of areas for extraction before assessing. First of all, before having a plan on how to do this. It's kind of extractive is an aside, isolated sector in the economy. There is no connection among these two. That's the reason why countries like mine is becoming a resource-dependent country, because there is no diversification strategy to deal with that. In cases of COVID, for example, would not be a big challenge if we had a diversified economy. So we need, as countries, to plan our development, to plan the extractive industries as a part of our development strategy. The first point. The second point I would like to raise, and it's important, it's about this energy transition. I think that the countries need to include that in their policies. What I see regarding the case of Mozambique, and we tackle on that in our assessment on Rovuma Basin project, is that the countries are not taking seriously the issue of the transition. We are like, 2030 will not impact on us. It will, because the phase where the benefits should go to the states, the commissioning probably, or the reducing or the implementation of the agreement will start. So we will see the level of production reducing, the level. I hope it takes a bit more, not in a negative way, denying the impacts, but I'm looking to the opportunities that we will be missing because we are not putting in our policies the need to adapt to green technologies. For example, we recently signed new agreements in new oil areas, and I didn't see any clause mentioning the green technologies that need to be adopted by the companies. So how will we be adapting ourselves as a country if we are not taking measures, we are not including that measures in the policies and then translate them into the contracts and make them mandatory to the companies to fulfill, meaning that in future we will be complaining that we are left behind, but these will not be because of the others, will be because of us, because we are not putting or taking in consideration the measures that we need to make sure that all the decisions are in the law. All the companies that will operate in our country will need to be adapted to the new challenges. I will stop from here saying that there is a really challenge on transparency in terms of the way the countries negotiate the contracts, the way the countries are taxing the companies. There is a lot of discretionary power, and we need to move or to create a movement to stop that, to make sure that the legislation is enough to regulate the fiscal regime and reduce this discretionary power, because the governments are selling our resources for so few returns. So we need to be on top in terms of advocacy for that. And finally, we need also to reinforce the state's capacity to audit these costs that the companies are arguing that they incurred, because this is the main way from where the countries lose or miss a lot of resources. Thank you so much, and thank you for having me and sharing our experience from Mozambique. Thank you.
Thank you, Fatima. Rachel,
mine are very quick. One is that contract disclosure is not an end to itself. I think there's need for civil society and stakeholders to ensure that however much you are pushing for contract transparency, but we should ensure that once contracts are disclosed, we have the adequate capacity to be able to analyze these contracts and what it means in terms of revenues. And in times like COVID-19, which is not going to be the first and last pandemic, I think financial modeling is necessary to assess the impact of COVID in terms of economies around the extractive sector. But also for Tanzania, I think the establishment of a sovereign fund is key. We already have one in the oil and gas, but we don't have it in the mining sector. It's just not that we don't have the fund, but we don't have a specific legislation that looks for management of revenues accrued from the mining sector. So during times like this, it is difficult to assess the contribution of especially large-scale miners in terms of revenues in the country. Our expectation is to look at EAT Tanzanian reports, see how much companies have reported in terms of taxes that have been paid. We see a lot in terms of ASM sector, as I said in my presentation, but there's little information when it comes to large-scale mining. The other thing is that COVID-19 is just one of its own. I think it's the level of preparedness in terms of all stakeholders and all countries to ensure that with such strategic sectors, they should ensure an environment for preparedness on how they could deal with future pandemics that are going to impact greatly the economies, especially for those resource-dependent countries. Otherwise, I just want to appreciate the organizers of the conference, plus my fellow speakers. I hope we can continue to touch base and exchange information in the near future. Thank you so much.
Thank you, Rachel. Mutwalo, you have a minute also to say a few words. David, I don't know if you would like to just share any final thoughts before we conclude. I imagine we were, but Mutwalo, please go ahead.
My final remarks are quite brief. I think, first of all, we need to ensure that we have the right and adequate tax instruments to ensure that we're able to optimize revenue from the extractive sector. There's a split movement across the African continent right now. Some are trying to look at easing the administrative burden on the administrative authority by focusing on production-based taxes. Some countries in West Africa and the Democratic Republic of Congo have brought back forms of resource rent taxes. But I think it's essential for us to have the right instruments, both production and also profit-based taxes, for us to be able to optimize revenues, and not just having these tax instruments, but also working on having the rightful administrative capacity to be able to conduct regular cost audits and ensure that we're able to bridge the gap in terms of revenue loss from this eroding payments. Thank you.
Yeah. Thank you, Mutwalo. David, you have any last minute final remarks? Yeah.
Well, I guess I think all the panelists have made some really good points. Just what Fatima said, I wanted just to second on the energy transition. It's happening everywhere else, but it will affect both oil and gas and mining countries in Africa. And that's really important. But it's important to separate the economic impact from this from the moral and emotional and ethical side of things. Like whatever you believe about climate change, the economics is going to be very serious for a lot of African countries. So it's, as Fatima says, it's really important to prepare now for that. And in terms of just contracts and tax breaks and so on, I think across Publish What You Pay and all the organizations represented here, really important to continue to monitor contracts and the deals that governments are making, and to analyze those to make sure they're a good deal for your country. Thank you.
Thank you, David. Thank you to all the panelists. I think we really discussed some very key and pertinent issues, and the discussion continues. This is basically building on conversations that have been happening for quite some time in light of what has transpired, during this COVID period. I think the key takeaways really is that as governments and also civil society, really from the point of civil society, is that we need to really push governments to put in policies and practices that will stand the test of time. In this case, also stand pandemics and any shocks or disruptions that occur from time to time. So I think this period has also taught us what to really campaign for as much as possible. The debate around tax breaks, tax incentives, I think is continuous. In some cases, there is where people are saying, there is no need for tax breaks at all during this period, but also countries that have continued production during this season. Does it apply? If the projects have been operating as well as they should be anyway? So it has been a very rich discussion, and I thank you all the participants for your active participation and for engaging really. And I think the discussion really doesn't end here. So there is so much happening as well this week. And I know there will be some other events coming up, but look out for any other meetings, online meetings, some country events that are being streamed online on some of the online platforms that the Tax Justice Network Africa is coordinating. And so we are really, really excited that you were able to join us. Thank you so much to the speakers and for taking time to prepare for this session. We appreciate that. And thank you to Bevin who was able to navigate with the interpretation and interpret for the Portuguese speakers. Apologies to our French attendees. We had some technical challenges with the French interpretation, but hopefully we'll do better next time. So thank you all, and wish you a very nice evening, afternoon or morning for wherever you are. Thank you and have a good day, and the rest of the week, have a good week. Thank you. Bye.